Now, the 4 winners for digital bank has finally been announced. It was supposed to be mid of this year, but because of this pandemic, it's been delayed to end of this year. And government promised December, and as of today, 4th December, it's officially out. The first winner is, of course, Grab and Singtel. If you have followed this channel, you do know I'm a big fan of this combination because I think Grab and Singtel, they have such a big customer base and they are so well, capitalized and stuff. So I do think they are the front runners, and indeed they have won. The second is SEA Limited. SEA owns Shopee, so e-commerce giant. Actually not a surprise also, but they're up against Razer. So between the two of them, I was not too sure who's going to win. So those two actually own the digital full banking, which means they'll be chasing after you as a retail customer, offering you savings account, etc, etc. But the main thing is digital bank has to do all its operations online. They are not going to open a physical store, so it's going to be very different from DBS, UOB and OCBC. Now today's video, I'll be sharing with you how to understand the digital bank's growth. I'll be giving you a case study, a very interesting case study, mid part of this video. And towards the end, I'll be sharing with you more insights as to what I imagine will be the impact towards our 3 incumbent banks. You know this today's title. And if this topic interests you, continue watching on. Hi guys, welcome back. Now there's so many digital banks all around the world. There is Chime in US, there's WeBank in China, and Singapore is actually pretty slow in terms of issuing a digital bank license. I guess we're always prudent and we always want to make sure things are right first, in Singapore style. Now, but the case study I've chosen for you is actually Kakao Bank. A few simple reasons. First, I want to help you understand the potential growth of a well-run digital bank. Second, I want to help you understand the potential disruption that a digital bank can bring to an incumbent bank itself. And the third, I want to help you understand why digital banks are so popular with customers nowadays versus a traditional bank. So let's dive on to things right away. This is the Kakao Bank's launch. It was done in July 2017. And as you can see over there, on the first day, it was actually doing 100,000 new subscribers. Actually, some other reports mentioned 240,000 subscribers were actually clocked in. Kakao Bank is actually owned by Kakao. Kakao is, like WeChat in Korea. So they're actually pretty big as a platform itself. So Kakao Bank uses that as a way to reach its customers. So back to the chart itself, what you can see in a quick 1 week, they reached 1 million customers. Then in a quick 2 more weeks, they reached $2.something million. Take a guess as to right now where it actually stands. You'll be really surprised. Now I'll show you in a while, but bear with me. Again, we'll look in terms of performance. Deposits, how much have they drawn? Actually, 22 million on the first day. Loans, 12 million. This has been growing very exponentially in the first few weeks, correct? But let me show you now what is happening as of right now in 2020, second half of 2020. I guess the numbers are even bigger than what I'm showing you right now. Active users, because that's the only number I can find, active users on Kakao Bank is already 11 million. Total users, I guess even bigger number than that. What about the total number of loans? Wow, the total number of loans distributed is 17.68 trillion. 770 million all the way to 17.68 trillion. That is a multi-fold jump. Of course, it's done over 3 years, but again, it shows you the power, the exponential growth of a well-run digital bank itself. But the main question is, of course, is Kakao Bank profitable? And I have this infographic to show you over here. It was launched in 2017, correct? The first year it bled in terms of Korean won, $104.5 billion, but it actually turned profitable in 7 quarters. How so? This is actually the profit chart over here. You see, third quarter, and it started climbing as customer acquisition was taking place. And in first quarter 2019, they actually broke even and showed profitability. Most analysts at the start, through my research, were expecting 5 years for it to break even. Wow, but they actually did it in 7 quarters. Fantastic. And as of right now, second quarter 2020, its profitability is 26.8 billion Korean won. So you can see the growth, the real money-making ability of it. So the next question is, why do people embrace digital banks so much? Now, this is actually a report by Ernst & Young. Most banks, traditional banks, Malaysian bank included, Singapore banks to a large extent, are not really customer-centric in a lot of ways. They have a lot of regulatory requirements. As you know, I'm in the finance industry. I'm so familiar with regulatory requirements. There's red tapes all over the place. And compliance is always, there to make sure things are in order. Compliance is a big cost when it comes to finance. And not only that, digital banks being mobile only, they have much lower operating costs. They don't have branches, They're not allowed to sell through a branch. If not, they're not a digital bank. They have to sell everything through their app itself. And Kakao actually, through its initiatives, reduced overseas remittance cost to 1/10 of existing lenders. That's a fantastic value proposition. Not only that, they very cleverly targeted 30 to 50-year-old segment. When I read this, I was just like, wow, that is smart. Because as always, 20 plus, there's fresh grads. Fresh grads, we all don't have money when we first started working, but 30 plus, 40 plus, that's where serious money has been made. Serious wealth has been accumulated already. And that's usually a segment that I work with also. So very, very cleverly done, Kakao Bank. So in a lot of ways, just to reinforce, banks have a lot of things going against them. I will use this from Forbes just to reinforce the key points. Just in case you're doubting whether a digital bank can disrupt a traditional bank or not. Firstly, there are legacy systems within the bank itself. Once things are built, it's so difficult to change, and nobody wants to take risk and change. This is highlighted in the second point, risk aversion. Everybody in a big company is always trying to do business as usual. They are very risk averse in a lot of ways because they don't want to disrupt current profit margins. Not only that, there's skills gap. Banks hire people familiar with the scene itself. They're not looking at technology as the first leg of entry. And not only that, they also have not a lot of room for experiment because again, when you work with a big organization, you want to keep your rice bowl, you want to keep things in order. Banking needs a lot of regulatory approvals and a lot of stuff. So that's why keeping things in order is very deep rooted into the culture. Now, if you have benefited, smash on like so more people can see valuable content like this. And again, if you haven't subscribed, press on the subscribe, join our family, become more financially savvy. In the next couple of weeks, I'll be touching a little bit more on these 3 banks. And if you are keen, do subscribe so you get notified when it's released. Now, the main thing is this. We've went through a case study on Korea's digital bank, Kakao Bank. And do you know that biggest traditional bank that Korea has is actually KB Financial? So my curious thought is, what kind of impact did KB Financial actually see from 2017 onwards? And these are the numbers that I'd like to present to you. Now, KB Financial, ever since 2017, if you look in terms of the net interest income, it has still been growing. Net interest income is core to a bank, which means they borrow money from you and then they loan to firms. They make the spread. That's called net interest income. It has been growing, even though Kakao is now in the picture itself. To me, that signals a few things. Kakao could be serving an underserved market. The overlap may not be as big, or the pie is just growing so that everybody is still having something to eat in a lot of ways. That has translated to a slight growth in terms of earnings per share. But again, that is Kakao Bank versus KB Financial. What is the fate of Singapore banks versus our 2 new full digital banking license? Now, in my opinion, the fight for deposit is not new. Singlife, a digital insurer, has actually came out and they've been attracting deposits already. They've actually this Singlife account, which actually was very popular. It actually brought a lot of brand attention to itself and it's actually raised the benchmark. In my opinion, Singapore banks are not new to this kind of competition. The landscape is very different. Back in July 2017, the Korean banks may not be as prepared. That's why when Kakao Bank was launched, it took off very quickly. But right now, Singapore banks have actually seen, in terms of neighbors, what has developed and what must they do in order to fend off the competition. I guess in a lot of ways, they are more prepared. Kakao Bank has done fantastic, but Korea is actually a second digital bank, which is K Bank. And as the title suggests over here, it means that K Bank is now in limbo. It is not done well. The capitalization has not done well. The take-up rate has not done well. There seems to be only room for Kakao Bank in Korea from the surface itself. I don't know, between Grab and between SEA, who's going to emerge victorious, or do we have room for both of them? It's up for anybody's interpretation. And it's also mentioned, I've done further research. This is actually a Channel News Asia article. It's mentioned also that Metro Bank, a digital bank in UK, actually needed 7 years to break even. It's not as easy to crack the egg as it seems. And as Mr. Chia has mentioned, most digital banks are not profitable. So again, warning signs, it's not as easy. The incumbent banks are not going to just give up the pie. Because when we think about it, you may be imagining what we have seen in terms of the telco scene. When Singtel, StarHub and M1 used to have a monopoly of things, then now we have challenges that come in like GoMo, like TPG, and everybody seems to be racing to the bottom in terms of price. Now telco services are so commoditized. Data service, call out service, all these are so commoditized. But I think banking relationship is a lot more sticky in some ways or another. Now, I haven't mentioned the winners of the wholesale bank, which are first, Ant Financial. No surprise, they're a fantastic company even though the IPO flopped. And the second is actually a consortium of Greenland Financial and LINKLOGIS. Now that's quite surprising to me because I was very sure that iFAST was going to win. But again, that was my biases because I work with them. It's a bit sad they didn't get awarded the digital wholesale bank. MAS actually promised up to 5, and so far 2 digital full bank, which I've mentioned already, as well as this 2 digital wholesale bank. So maybe in future iFAST has a better chance again. I don't know. But again, let's move back to the main question, which is how much operationally will our 3 main banks be suffering: DBS, UOB, and OCBC? My gut feeling is operationally they should be fine actually. I think they have a lot of time to fence up because again, operations for these banks are going to start 2022, which means another year or so to prepare, build up the fences. And again, they have a fantastic reputation in my opinion in the Singapore market. Singapore market is quite mature, which means we have all been tied with a lot of banking services with these 3 banks, and in a lot of ways I think the competition is not going to erode their market share too much at all. So that's my gut feeling. If you have a different interpretation, leave in the comments in sections below also. Now to sign things off, I've actually a previous video I know you've seen before, and I've actually mentioned do not buy Singapore savings bond, wait for the digital bank because I believe they'll be throwing you something fantastic, at least for the first 6 months kind of thing, They always do this sweetener offer and then they start changing rates and stuff. I believe the 2 digital banks, which are the first one being run by Grab and the second being run by SEA, they're going to throw us something fantastic. So look out for it and look for that video because I actually run through a bit of research as to what Hong Kong actually experienced when the digital bank was actually released then. With that, look for that video. I'll sign off from here. Take care and goodbye.